Good morning, Chris. How are you?
Doing great. How are you?
Doing good. And looking forward to this interview more so than most because as I heard the news that you decided to pull the ripcord and shot you an email. Your email back shed a lot of color that I have been preaching for a couple years now. So it was I could feel the juicy passion there. Sounds like we were going to have plenty to dive into here. And so, for the listeners that are not familiar with you, Sportech, your business, and kind of your journey, I think you know what I love to let's go back, like how or why or was there an accident and how you became an entrepreneur. Let's kind of start with like how that happened and what was the business that you were in.
Yeah, certainly not an accident. I think my story is similar to many, including yours, where I was raised in an entrepreneurial environment. And I'm very thankful for that. And I'm trying to do the same with my kids. But yeah, my father and I started together, and my dad was an industrial designer and a wild-eyed entrepreneur. And we're passionate snowmobile enthusiasts. And it literally our first product was developed on the side of a rutted trail in northern Minnesota. Came up with an idea for a little headlight cover for snowmobiles that kept snow, ice, and debris out of this recessed headlight area. And we literally fabricated it out of a piece of cardboard that night and thought it might work, and prototyped some parts and took them to a swap meet and sold every single one we had, and thought maybe this is a business idea. So that's that was the impetus of Sportech. And my dad was approaching retirement age so early on, as we started getting distribution channels established and I started talking to OEMs. He's like, oh, wait a minute, I was looking for a little home-based business for a little extra cash, something to do. So I bought my dad out real early. We're still home-based, and then developed it. And we started in the snowmobile industry exclusively, accessories, started selling to aftermarket, but almost immediately captured the attention of the OEMs, and was able to get a relationship established with them. And as the business grew in the early years, we diversified from the snowmobile industry, which was really in a free fall. The size of the industry was falling rapidly. So we start branching off into ATVs and eventually got into motorcycles and side-by-side utility vehicles. And that was the piece, the side-by-sides, that really created opportunity for us. So we pivoted to, within about 10 years of the beginning, to 100% OEM. So we were a tier one supplier to the major OEMs in the power sports industry. Started with cabin closures for side-by-side utility vehicles. So around 2001 to 2005, when that industry really took off, we were building the roofs and the windshields and door systems, complete enclosures, designing and selling directly to the OEMs. And towards the end, we had expanded into agriculture and transportation and material handling, but we were cab enclosure experts. And it's what November we closed, and so it's still pretty fresh. And we were the
Yeah.
largest in the country in that space, and we were about 140 million in revenue,
How many
and
employees?
we had about 400 employees.
So
Yeah.
like I want to go back to, because and I appreciate the context. It helps as people can now like pay attention to the story, because I think there's some interesting maybe we can cover a couple of things on the growth part, Chris, because I think
Yeah.
from just watching the sidelines of knowing some of you and your friends and hearing some of when you said the challenges of it, like you had some pivots and some diversification. I think
Yeah.
before we get to the point of when you sold, some of the growth pains that you guys had, because I think as you and I think was it a few years ago, you'd even said in your office of like how you're trying to diversify away from certain things because you
Yeah.
understood value creation. And I think kind of teeing this up is not a lot of entrepreneurs think about value creation long term. They're kind of focused on annual income and distribution. So like, what were some of the big milestones as you were growing, of like some big challenges, and how did you morph along the way?
Well, great question, by the way. I think that one of the biggest challenges for a lot of entrepreneurs is you jump into an industry because you're passionate about it and you have some content expertise. And that was the case with us. I mean, I was an absolute power sports fanatic and specifically a snowmobile nut. So our first products in those early years were all directed at snowmobiles, and they were great products. We had, tremendous success, rapid growth. But an interesting thing happened. My passion for the industry didn't go away or decline in any way, but the industry fell apart. So as we started, there were a number of businesses that started up in the aftermarket of the snowmobile industry. And this is around 92, 93, in that era. They were building 500,000 snowmobiles a year worldwide. The industry was strong. All of a sudden, it starts to decline. It went into a free fall through the mid to late 90s. It got to a point, where there were only 125, 150,000 snowmobiles sold. So it completely changed the industry,
Wow.
and we
Yeah.
were able to pivot with it. And for me, it became fairly obvious that if we didn't change, if we didn't start working on products and designing products for ATVs and motorcycles and other areas where I had passion, but not not equal to what I had for
Hmm.
snowmobiles. Had we not done that, the business would have died. And as I look back on it, a lot of friends that I had and competitors that started their businesses roughly the same time we did, early 90s, they're gone because they refused. They were either unable or unwilling to pivot away from snowmobiles. And it was really a hard lesson for a lot of us. And I'm glad, very thankful that we did it when we did. So that's one of the big things that really stands out with me, and I see that today with friends of mine that are in businesses, and I'll say, "Hey, it looks like your market is
Changing.
declining.
Yeah.
Or have you thought about diversification?" Well, no, because I'm a guy that this is my deal. This is what I'm passionate about. And it's like, well, you might want to you
I'm
might want to
really
reconsider.
passionate, Chris. I'm really passionate about floppy disks. So what's
Yeah, yeah,
yeah?
yeah.
Now you're called a you have now a museum. Well, it's interesting because our old
Yeah.
business in the print. I mean, the print was declining 25% a year. I mean, and it's
Hmm.
interesting. Like as you're doing this, like there's certain like leading indicators. Like how what was the dialogue with your team inside your head? Like when you're watching the free fall happen, what was the conversations going and how did you handle what you like the direction that you're going to pivot to?
Well, you know what, I love what Collins introduces in I think it's in Good to Great. He talks about some of the best entrepreneurs that he ever worked with had a trade called productive paranoia,
Hmm.
and I was paranoid. I mean, I'm looking at my business. We're 100% invested in one space, and I'm looking at the size of the market and the size of the opportunity declining before my very eyes.
Yeah.
And we were rabid enthusiasts. We raced snowmobiles. We trail rode snowmobiles. It was my family. It's what we did, right? So I knew the business, and I watched it closely, and I could see the decline. I'm going to these national dealer shows, and I'm watching as it's literally falling apart before my eyes. Dramatic drops. We went through periods where it didn't snow in the Midwest
Hmm.
and key markets, and dealers were not selling snowmobiles. So yeah, I think for me it was just a smack in the side of the head with a 2x4, right? And it's like we either make a change now or we're going to be in huge trouble. And I'm so thankful that we did. And it was, to be honest with you, it wasn't that difficult. We took the same passion from a design standpoint and put it into these other spaces that were growing. So at the time, ATVs were exploding, and we started designing, components for these ATVs that were very similar. They were molded plastic components for ATVs and eventually motorcycles, and it was, I look back on it and it was the right thing to do. I'm just very thankful that the old 2x4 to the head occurred because it's
Yeah.
hard. It's hard because it would have been easy for me to say, well, I'm not going to build parts for motorcycles or ATVs because I'm a snowmobile guy. And I think people would have said, yeah, I get that. But we would have ridden it right to the bottom. And today, that industry, it exists, but it's about 100,000 units worldwide versus 500,000 when we started.
So,
Yeah.
Chris, that 2x4, I think, is an interesting, I love the analogy, but like, and as you look at the journey of an entrepreneur, I think there are multiple 2x4s that happen if people come out the other end. And that goes from, you're a snowmobile guy and now you have to be something else, right? So you have to change your passion. And did you start approaching the business differently? So did you become more like an entrepreneur, like, okay, now this is about making money and staying in business, or did you follow your passion? Like, how did you get into those different markets? Because I think, as we progress your story is, I think that at some point there's another 2x4 where it's about creating value and sustainable and predictable and transferable cash flow at some point, which could be, it could be selling 2x4s and snowmobiles and all this. So, but like, before we get to that, which kind of gets into your eventual sale, like, how did you start approaching the business differently from the visionary perspective of where you were going?
Well, that's a good question too. I'll be honest with you. The passion component is what drives me. It was driving me from the beginning, and it does today. But there's a common sense component that I think came into the picture here. I was in my late 20s. I had 2 little babies at home. So I was an entrepreneur and this wild-eyed, passionate entrepreneur, but I needed to put
money.
groceries on the table.
Yeah.
Right. I mean, this wasn't a hobby where I could just do this and then casually walk away. This is how I was feeding my family. So back to the productive paranoia, I'm very thankful for that instinct that's like, hey, this something smells here. So I'm glad. But I think the core, what we established in those very early days is how we were going to run our business, how we were going to treat people, how we were going to treat our employees. That culture that we started when we had just half a dozen people existed right to the end when we had 400. I'm thankful for that. That didn't change. The fact that we're passionate. When I first started my business, I would only hire wildly passionate snowmobile enthusiasts. If you didn't ride thousands of miles a year, if you didn't know the product, if you didn't race, I wouldn't even hire you. And I back then I thought it was because snowmobile people are just the coolest on the earth. And while I still believe that, I realized today that what I was looking for is drive and passion, that people that are driven, that wanted to participate in a industry that they love. So we kind of had to, pivot on that. We still look for passionate people at the end, but I had, obviously people that had never seen a snowmobile before. So we learned a bunch, but the other thing too, I think that really sticks out is I learned very early on the importance of differentiation. If you don't have a highly differentiated model, you become a commodity supplier, and in the spaces in which we were participating, it's bad news. So
what was your differentiation?
We focused on design. So from the very beginning, we had intellectual property in every product. So we were the opposite of a contract manufacturer. We came to the OEMs and brought ideas to them, and that's how we got in the door, and that's how we maintain that relationship right to the very end, versus participating in contract manufacturing. I mean, we never got a print sent across to us with an RFQ. We wouldn't even know how to do it. So we were very, very innovative. We had to be our existence dependent upon it. And that's really how we structured the business. So at the end, we had intellectual property at some level, whether it be completely ours or shared, on 95% of our products. And that was the way it was all the way through. And that was really the key for us. So whether it was a snowmobile product, UTV, at the end we were building, cabs for forklifts and for different vehicles of all shapes and forms. The key for us was that we owned the intellectual property. We came to these OEMs with a solution, and that's really what drove the growth. And it started with snowmobiles, and I thought it had to be about snowmobiles. And at the end, what it really turned out to be, it was about value creation through design.
Okay, so there you just I think we just hit it there, because I think if I were to have asked you what business were you in, that would have been the design business, and then obviously you made the stuff. Because I think there's this challenge. I think when and where this question comes from, Chris, is in strategic planning, and there's a lot of EOS listeners and traction people, businesses that run traction, and
yep.
That's not a strategic plan, right? It's like, what business are you in? What is your differentiator? And
yep.
You guys were designing, right? So that that's what I'm kind of getting at here, is that that allowed you to look at the different markets differently, right? Versus just saying, yep. I'm a snowmobile company, right? And an enthusiast.
Yeah, I mean, yeah, you're right on. It's interesting because we were one of the top 20 thermoformers in North America. We were one of the largest thermoforming companies, in North America. Yet nobody really knew that. I mean,
Right.
we vacuum formed plastic in large volumes. I mean, we had plants full of equipment. We bought millions and millions of pounds of plastic. But if anyone ever asked me, what do you do? We're a designer. We're designers and engineers who happen to mold some plastic. I mean,
It's way
being a
different, right?
thermoformer didn't differentiate us. And I say to this day, we had competitors that were as good or better than us at molding plastic, right? I mean, they beat us on price all the time. They were very capable, but they didn't have design capabilities. That's what we did,
Right. And
and we,
what's interesting, Chris, is like I've given an example, and correct me if I'm way off here, but like when I was, because there's people that have job shops that I work with, or people that have been on the show or whatever, and
sure.
like when I explain, like, because they're like, well, how do we differentiate? How do we get like a monopoly or protect our cash flow? I literally used to tell the Sportech example. I said, well, there's a company I know that would take their designers and they're building the next year's model before anybody even knows. So
Yep.
it's just like,
Yep.
so maybe explain like a little bit more about the design, then we can keep going to the growth. Cause I think correct me if I'm wrong, right? You had like your designers were working with these OEMs and manufacturers of designing the products before they went to market. I mean, years before they even came out. So you're not getting an RFP and just bidding on the price.
No, we didn't. We didn't do quotes, right? So yeah, so we were working with these OEMs, oftentimes 2 and sometimes 3 years on products, 2 and 3 years before they came out. And again, we were working on accessories, primarily accessories, sometimes production components that were used on these vehicles. So if you picture, a side by side, a new John Deere Gator or a Polaris Ranger, they don't come with a complete cab typically. Well, they did at the end, but they typically come, as an open ROPS, right? So there's a rollover protection system, but no doors, no windshield, no roof. And they would present us with CAD on these vehicles, and then we would present them with concepts on what it might look like to put an enclosure on a vehicle that, by the way, was inherently designed not to have an enclosure. So that was very challenging from a design standpoint. But then I think the critical part of that for us, and I think the message that I share with a lot of entrepreneurs looking to differentiate is, you don't just walk into, any one of these major OEMs and say, hi, I'm wildly creative. You got to let us design some parts for you. You build trust. And so a lot of people, when they hear our story, how we started in the aftermarket and then, transformed into being an OEM supplier, that was a necessary transformation. We actually got called by these OEMs when we were selling into the aftermarket and kicking butt. They're saying, hey, we see what you're doing. You might want to come see us, right? That's kind of how you get in. You could beat on their door till you're blue in the face, but if you haven't proven yourself. And then I think those early years, it was about earning trust with these OEMs, showing them, demonstrating to them what we could do, and then also demonstrating that we can scale with them. So we went from a garage operation to within, a very short period of time, 20 and 30 million in revenue. And we had, I'll never forget when I bought my first seat of SolidWorks CAD. I mean, it was a big deal. And, before long we had, a dozen and 15. And at the end, we had, probably close to mid 50s, 55 seats. So you have to be able to scale with the demands of these OEMs. And that's hard, especially for smaller businesses, to be able to prove and earn that trust that, hey, not only can we do this, but we can scale with you and keep up with the demand.
So couple questions on that is scaling up and keeping up with the demand. So like I've done a couple of podcasts recently about, how growth consumes capital. And so people struggle as they're growing between, the AR being too high and like their vendors screwing with them or clients. And then also management team constraints, all these different things that make even just, really like fast natural growth really, really hard. Was there anything that you did that you're like, okay, that really helped? Because did you have any partners before you sold? You were a sole owner, correct?
Yep, sole owner. Yep, no partners.
Because
And
so many
yeah,
times people like they go out and they find, minority capital partners because they don't know how to handle that whole situation.
yeah, no, and I see it, and we certainly felt that at times when, we were gaining traction and growing. That we had compound annual growth rates in the mid 30s, for several stretches there, and just to cash flow that kind of growth in manufacturing when you're adding plants, people, equipment. I mean, it's significant. You know what? I think part of this was just by luck, and part of it's just how I was raised. I'm not a debt guy, and it's kind of old fashioned in this era when all we talk about is how you can lever this and lever that. I just kind of this simple concept of not spending more than you earn. I know that's odd, but that's kind of how I started. And
Yeah.
I'm very blessed now, my family, and we're able to do things that I'm just blown away. But I didn't do that when I was building my business, and there were times when I remember we were 40, 50 million in revenue, and I had everything, every chip I had in that business. I didn't have 401k. I had no investments. I lived in the same house that my wife and I bought after we were first married for 23 years. I had employees that lived in nicer homes, had more money in the bank than I did all the time. But as an entrepreneur, I'm betting on myself. And I remember specifically hiring my first fancy pants MBAs and listening to them talk about their rolling over their 401ks, and they came from these big blue chip companies, and I appreciated them. They're doing a great job. But I remember thinking, man, I don't have any of that, and I'm all in. And we just were very careful about that, and it really paid off at the end because we had a great solid balance sheet, and we were able to grow and fuel it at the end very aggressively. Had I chosen to live like a rock star, 12 years into this thing and spend money and run around, it would have ended badly. So I'm thankful for that. And that's hard. That's hard to talk about because a lot of people, you have some level of measured success. They think, well, I got to go out and buy a luxury sedan. I got to have a place, I got to have a second home. And it's hard, very hard.
Well, and in that note, as we're kind of going, progressing with your journey here, was there ever a shift in your mindset? Like I'm always trying to now figure out when this happened with people, and maybe it never did. Of like, because like the shifting from annual income and making this like pulling all the perks out of your business to looking at long-term value creation and understanding what that value might be at the end. And a couple examples, I mean I literally know people, Chris, that have offered 10 20 30 40 50 million dollars for their company, and they can't sell because they need every distribution from the business. Like they
Right.
literally can't reverse engineer and to say, well, hey, like in order to maintain my $800,000 lifestyle, I can't sell my company. And so like, versus like understanding
Yeah.
what that asset might be. Did you ever have a shift in your mindset, or like, where did that come from? And like, how did you start shifting towards like what you could eventually do with Sportech?
Yeah. Great question. Have you done this before? Is this your first podcast?
Yeah, a few years in.
Really good question. No, absolutely. There was a pivot point for me. I mean, complete change of thinking. It happened 10 years in. So, 2012, rapid growth. Really, we had an opportunity to really ramp up our door production for a couple OEMs, and it was the first time that we were given complete control of, we own design, all manufacturing and assembly. It was requiring us to bring in an entirely new group of people, significant process changes, and we had to add a bunch of space. So long story short, bought a big plant, staffed it with a bunch of folks. We're doing this complex assembly. It was going to grow. I mean, we were going to grow that year, probably north of 40%. And we got to we got in, we start producing these doors. We're shipping on time. We realized that after about a month, I'm losing about $1 million a month.
Oh,
and doors are looking great. Customers happy. We had massive cost accounting problems. We had grown the top. We had made commitments to produce these parts, but we hadn't earned the right to grow at the rate that we were growing, because I was lagging from a people standpoint. I was trying to run this business 10 years in, from a garage operation. Now we're 40, $50 million in revenue. I'm trying to run it with some of the same folks that I had from day one. And they were wonderful, gifted people that I loved with all my heart, but we had reached capacity. And I needed people that could come in and help us scale this thing. And it was in all areas. It was operations, it was finance. And that is when we implemented Traction. And it came at a great time, made a commitment to start bringing people in to ensure that we could scale this thing, started operating with that system. It helped us. But I think the big thing for me was, I'm 10 years in and I'm looking at this, still no money in the bank, by the way, still putting everything in, sliding every chip in. Yeah, I mean, wearing my arms out from sliding the chips in. And I mean, now I'm all of a sudden a little older and I'm like, hey, wait a minute here. Where does this end? What is the end point here? And that's when I really started to pay attention to the M&A markets. And I specifically remember digging in and really trying to better understand what are the key value drivers in a business. And we made a conscious effort at that point. After we committed to Traction, I completely turned over my senior leadership team. One of the most difficult things, or the most difficult thing I've ever done, because I had to part ways with some folks that were great people that helped me grow the business to that point, but we were not going to get to that next level with the same team. So we made process change, operating system commitment, completely turned the leadership team over, and I committed to an intensive study of M&A, value drivers, and I committed to run the business from that day forward as though it was for sale, even though it wasn't. And I had no intention of selling the business. In fact, right to the end, I thought I'd keep it and turn it over to my kids. But I knew that it was going to be important that I understood what are those value drivers, what inherently drives value, what depletes value. And because obviously there's a reason that those are the value drivers. It's a healthy business when you pay attention to these things. And it completely changed our business from that day forward.
So, I'd love it. If I could just capture everything you just said and then just spread that across the world. I mean, and it's hard as heck to figure that out because you start to realize, I think you hit on a lot of good notes there is at some point you got to get your money back, right? If you're putting all the chips in, you got to if you're just even a normal person, you're going, okay, when is this when is it about me? You know what I mean? When do I get to take some on? So as you're doing this and when you say it completely changed the business, what are some different, how did your strategies shift? Right. And, so what are some of the big takeaways that as you were learning M&A and value creation, how did that trickle into the business? What were things that you were doing?
Well, I've been in peer groups since day one. And one of the smartest things I ever did, someone encouraged me to get involved in peer groups. And I was in a CEO group at the time, and we brought in a speaker who talked about M&A and business valuations and kind of the trends in the market. And this would have been circa 2012, 2013. And I'll just never forget sitting there and just having this awakening as he's talking about enterprise value and the importance of understanding those value drivers, whether your business is for sale or not. And that's when I really committed to, I'm going to run this thing like it's for sale, even though it's not, because it's the right thing to do. So, for me, I had to get my head around that. And it's hard because that was not my first instinct, right? I'm this crazy entrepreneur. I'm a visionary, just working on grow. And I think the first 10 years of my business, I just thought if I can grow that top line, keep growing it aggressively, keep an eye on costs a little bit, but let the other guys worry about that, I think we're going to be fine. Well, what had happened is we had a customer concentration that was out of control. I mean, I was concentrated into one industry, but then specifically with one customer who happened to be the largest in that space. And, if you look at key value drivers, regardless of who presents it, customer concentration is at the top. It's either number one or number two every time. So from that moment on, we start addressing that. And it's hard when that one customer continues to grow, but that's where we really put in a diversification strategy and started expanding into other markets with other customers, doing everything we could to spread that out. And as it turns out, fast forwarding to the fall of 2019, it was one of the best things we ever did. Had we not done that, had we just focused on our key customers in that key space, enterprise value would have been a fraction of what it was at the end. So I
That's
think it was
awesome.
just the process of, for me, it was another 2x4 to the head. I mean,
yeah, right.
I remember after that sitting with my peer group, guys I know and love that have been in this group with for years, saying, I think we need to change our way of thinking. I think we need to focus on this EBITDA thing they're talking about. I mean, literally, I had never talked about it prior to that, and I never really understood why it was important. But as it started to sink into my thick skull about the importance of that, and I remember talking to some of the guys in the room, and they said, "Well, I don't care. I'm not going to sell my business." I said, so even if you're not, I mean, it's
so
the right way to run your business. And how about the next generation? Do you want to set your kids up with a business that's got an 80% customer concentration, or do you want to just ignore these value drivers? There's a reason they're there. So our whole group kind of pivoted together, and it's been really fun. And it was just, for me, it was a mindset situation where I just had to completely
shift. I love
change.
it. I love it. And
Yeah.
and it's so, I think at some point in like a different parallel life of mine, I want to know why people don't want to focus on this. Cause it's like, okay, when I know you and I are going to get into it as we get into the sale and to private equity, but there's a whole industry that does this for a living because business owners don't think about it. And it'd be like real estate investors walking all over the place saying, look at all these people that never invested in their houses ever. And we can just buy them on the cheap and do all the stuff that they could have done over the years, but they chose not to. And it's just it's such an interesting, and I don't know, it's an interesting dynamic. And I don't know if it's because there's just no education out there, which is what we found. And like, I don't. So like, Chris, as you're diving in, you've got this new mindset shift. Like, before we hit the record, we were talking about, and my analogy is when Neo in the Matrix sees the zeros and ones, right? Or someone goes from 2-dimensional to 3-dimensional thinking, and you go, okay, I get it now. Like, I know I don't want to sell, but I'm thinking about this all the time, because then you've got options and freedom, etc. As you're talking to investment bankers and you're starting to get in this world, you said that you weren't planning on selling until you were, right? I think that is also a big takeaway of most people are never planning on selling and then something happens, or like there's an offer. So like, where along this, as you're creating value and you're marching towards success, what was your vision for the business? Like, what did you want? Like, in your head, you said to pass down to your kids, like, what equaled success to you before you decided to go the different direction?
Well, I mean, prior to that pivot, it was about top line growth. And I was of the belief that it was just okay. We had a tough year where net profitability was off. That was just okay. So we didn't have controls in place. We didn't have a laser focus on cost accounting. It was just all about the top. And then in 2012, this year, when we started losing $800,000 to $1 million a month, and we finished that year with one of the strongest top line growth trajectories we ever had, with about 2% net profitability. And I remember after I had sat in some of these seminars and I started doing some research on enterprise value, I remember doing a quick calc and with just a moderate multiple and thinking, you got to be kidding me. This is what my business is worth based on last year's numbers. And I remember thinking, I'm not selling the business, but I don't have anything else. I mean, that's very common for entrepreneurs. There was no 401k. There's no pot of gold. There's no inheritance. This is it. And it really shook me up. It really, really shook me up. And I just was laser focused from that day forward. Still ran the business the same way with that entrepreneurial drive and the passion. But the major decisions we were making, the goals we were setting through our EOS journey, they were all focused on those things that matter most. I mean, you have to have profitability. The business, you have to continue to find new ways to increase profitability. And the customer that concentration piece for us was major. I mean, it was a big deal. And
there's a phrase, Chris, we talk about, which is sustainable, predictable, and transferable revenue. I'm sorry, and cash flow, both. Like your cash flow has to be transferable, and like it's what's interesting too. Then you can do whatever you want with the business, whether it's sell it to your kids, do an ESOP, do a private equity recap, because the cash flow pays for itself. So like when you said that you were looking to pass it on to your kids, what happened when you went from legacy, I'm going to own this forever, to not? Like, where were you when that decision flipped?
Yeah, it's an interesting thing when you have a set of values within a family and you raise your kids a certain way. I was raised in an entrepreneurial system in a household where I was taught to, if you don't like something, build it your own, start your own, you can do this. I raised my kids the same way. So then it shouldn't have been a surprise to me when I sat down with them near the end and said, hey, a couple things have happened in the business. We're actually, for the very first time, thinking maybe we should talk about selling it. But I assume they'd both say, oh, I want to run this thing. So I went to my son, had a conversation. He goes, Dad, I'm an entrepreneur. I have ideas. I want to do my own thing. I love the business. It's been great. But he hadn't been working in the business. He was on his own, doing his own thing. And he said, but no. So, I think you should sell it. And I went to my daughter thinking she would change my mind and she would have a different point of view. Word for word, same thing. Dad, you didn't raise us that way. I love the business, and she was working in it, but she had no aspirations of running it. She wants to do her own thing. So it made the decision for my wife and I very easy. We were very proud of their response, and I guess I shouldn't have been surprised, but that was kind of the point where we looked at each other, and we had our grandkids. We're just turning into grandparents for the first time. We're mid 50s and looking at life from a different angle, and all of a sudden decided maybe we should consider it. And that's kind of that's changed, and it literally changed in a matter of days. So to your point earlier, the business isn't for sale until it is, right? I think as entrepreneurs, we can draw a line in the sand and say, oh, my business isn't for sale. I have friends that do it every day. Nope, it's not going to be for sale. Interesting what happens with family, with health, with the economy. It could be, for every one of us, it's a different trigger point, as you know. Yeah. For me, it was looking at, where I am in life and what I want to do, how much time I have left. I got these grandkids, what matters most. And then the other thing is just that people forget about is, as human beings, and especially as quirky entrepreneurs, we reserve the right to change our mind. And right? I did. And the other thing is I was just kind of burnt out, loved the business, still love it. And I'm proud of what they're doing. But I was ready as an entrepreneur, we need variety. We need challenges. I need a new mountain to climb. And I was just ready for a change. I didn't see that coming at all.
So this is beautiful, Chris, because you know what? Like, I think the beauty of what you went through is you experienced the mindset shift about creating value before that happened, right? And you've probably seen this in your peer groups, as I've seen it in mine, is like that mindset shift of or that triggering event happens when you have a shitty company. And you like when I say like what if you build a valuable business, that's true freedom. And we're going to get into this as we march towards the sale story, because you explained to me some things that you had leverage on that most people don't. Where like if you build a valuable business, then you have choices, which is honestly what isn't that true freedom versus okay, now you're burnt out and you're miserable, but you're stuck having to do one thing or the other. So like, does that make sense? Because I think you're gonna
there's nothing worse.
Right? Like you want to, like, as an entrepreneur, you want to do whatever you want to do, and that's true freedom. But if you don't build a valuable business that you can transfer to someone else, then you become stuck in your own cage of cash flow. Well, and so go ahead.
Yeah. I just, one thing I want to add too, is I was when I made this pivot and I started looking at this list of the top 10 value drivers, obviously, as we start looking at understanding what EBITDA is, understanding how these other factors impact that, customer concentration. One of the big ones was, will the business run itself without the principal, without the CEO, the owner? And that was a big deal for me because I was more involved in the business. So I set a goal that I'm going to get this thing running, operating, continuing to grow and thrive without me. So I set out as I was building out my senior team, and I brought together just a team of studs. These guys were absolutely amazing and continue. They're running the business today. A couple things happened there. When I got to the point where I could take off, I was starting to take some money out of the business. This thing is cranking, still not for sale. It was wonderful in that it was adding value. The value of that business went up, significantly when we got to the point where it was evident and defendable that I didn't have to be there. But it also became less important that I was there, and it was a little hard on my ego. And
Mm-hmm.
I think
Mm-hmm.
we're entrepreneurs, we're builders, and I want to move the needle. And so I started enjoying it, and I'm taking more time off. And then it got to a point where it's like, this isn't quite as fun as it used to be. Now I'm taking money out. The business is worth more than ever, and it's a luxury. And I don't want to sound like a little whiner on this, but I think it's healthy for entrepreneurs. And I know there's a lot of them out there like me that think like I do. You want to be able to contribute, and I think you can stand back and say, "Oh, if I could step away and let these guys run the business, I'd be the happiest man in the world."
Yeah,
Maybe.
right.
Maybe. And I was happy and I was proud and I love these guys, but I'm not ready to quit, and
Right.
I want to move the needle. So it's interesting that actually played a role. That was one of the factors when we decided to sell. I'm ready to do something else, and I'm ready to kind of look at the next chapter, and that involves that building phase that I kind of missed.
So then let's get into the so when you decided to sell after this conversation with your kids, what was the next steps? Like, so, as you've been educating yourself in M&A, how did you hire your team of advisors, valuation that you were marching towards, whatever it was, what did, like, when you decided, okay, now it's action time, what was the steps that you took to hire the team before, because you said it took a year, so we can walk through kind of as this journey unfolded.
Yeah. Are you there?
Yep. Sorry. So that makes it. I don't know if it's had I'll make sure the editors get that out of there it said internet unstable. So like, what was the next step for did you hire a team of advisors? Was it an attorney, a CPA, an investment banker? Like, what was the next step that you took now that you decided it was time for action?
Yeah. So, the interesting thing for me is when I made that commitment, around 2012, 13 to start running my business differently, paying attention to value drivers, enterprise value, I aligned myself with some folks, to try to learn. So one of the first connections I made was with an investment banking group. They were, like many business owners, we're getting the calls all the time. Would you consider selling? And I would always just either ignore them or tell them no. I had a few that I talked with, and one in particular. So I started having conversation, and we would meet, once or twice a year, and built some trust with this gentleman. And it became evident that they were leaders in the market. So I did the same with M&A attorneys. I did the same with some other trusted advisors. So, while I was doing that, it was not with the intention of selling, but it was more about education for me. I wanted to better understand. So who better to educate you on business valuation than a sell side investment banker? They live it every day. They're looking at they know multiples and market trends better than anybody. So I just chose to try to tap into that. And he was hoping that someday I'd change my mind. And in the back of my mind, I'm saying, dude, I'm never gonna. Well, he was right. And I did. So it was real easy when we made that decision, and it literally happened in weeks. He was the first person I called. Said, well, you were right. He goes, well, I knew someday you'd call me. And and then it was real easy for me. So I had investment banking lined up. I had, M&A attorney lined up, and some of the other resources that I had built relationships with. I think looking back, I'm very thankful and I'm blessed that worked out that way. If I had to start from scratch and go out and interview a bunch of these folks, it would have been.
Oh my gosh, yeah.
You know what I mean? So, and then of course you ask, you have trust established with a investment banker, and then you ask them, hey, who do you know that can handle this? I mean, we have to do a QV. I need an M&A attorney. They work with the best of the best. So that really, really helped. And I recommend that people, whether they're thinking about selling or not, the better your understanding is of that M&A space and how it works, the better equipped you're going to be down the road when inevitably you change your mind or the next generation does.
So then as you're having these conversations with these advisors, at what point, because they call it the deal train, right? As the deal train starts going, what was did you have anything planned with your executive team? And then in your head, did you have any kind of like, okay, I think it's going to be a strategic buyer, maybe some private equity. I don't know how well educated you were on that marketplace and those kind of buyers, but like, what was the sequence of events of getting, between what you knew and then also getting your executive team involved? I don't know if you had some phantom stock programs or whatever it is, because I think that's everybody's fear is now I've decided I'm having, like mob type meetings with these investment bankers in dark corners and, the back room of restaurants so no one knows. And then like all of a sudden you have to like start dealing with this. So what was that like? What was that process like of getting everybody involved?
It was emotional, right? Because it was a big decision. And as an entrepreneur, I just remember having I had pinches of guilt, knowing that I needed to tell my team. So early on, I shared with my senior leadership team that we had made this decision. They received it pretty well, but I just remember thinking, hey, I'm sorry. I felt like I was disappointing them. And of course, I think that's just human nature. But I chose to let them know right away. I know some friends of mine that sold their businesses and they tried to, like you say, lurk around in dark shadows and talking to these guys in suits. It doesn't work, but we were a full disclosure culture, very candid, very open, candid conversation. So I chose to tell them, and I don't regret that. I think that was the right thing to do. And I think then it was kind of a systematic process after that in terms of gaining better understanding. As I look back, I made a couple mistakes in that era. I wish I would have done more research and really had a better understanding of strategic buyers versus financial buyers. I guess I had a vision in my head that we were going to sell to a strategic. I just was convinced that, and I even had companies in my mind, they're going to want to buy us. And, we reached out to them, and as it turns out, they didn't. We sold to a financial buyer. And I guess I just wish I would have better understood that and what the experience, how that experience varies, because it's a vastly different experience selling to a strategic versus PE or, financial buyer. I was not ready for that. It caught me off guard. It was a little unpleasant. Yeah.
So I was going to say, well, we can unfold that because I want to unpack that experience. Because like, we can kind of jump a couple steps of like, okay, so you got the pitch book, you got your investment bankers, you got your deal team, and I want to come back to the family office because I think that's kind of a parallel story. But like, as you got your investment banker, and I don't, if they ran a controlled auction where they got a few hundred people, some strategic, some private equity, financials. So explain what the difference was, because you could have a bunch of offers, but like what I try and say is every offer is different from the valuation, terms and conditions, what they want with you. I mean, like you can't even like imagine the amount of variables that could be different, and being able to weigh those variables against each other as what's important to you and the money is so difficult. So expand on like your experience of the difference of financial versus strategic in that process of learning that.
Yeah, so very typical. I think when we sent our book out, it went out to hundreds and hundreds, in very limited form, and then it got narrowed down, right? So I think we had, there were 40 or 50 businesses that expressed interest, and then initial indication of interest from 20, and it narrowed down. And early on, there were some strategic, but certainly more financial, which is a reflection of kind of the era in which we live. Mm-hmm. But I still thought that we would be most appealing to a strategic. And to be honest with you, I had that in my head, and I could kind of envision what that would be like. And that was the point when I needed to ask more questions, and I should have familiarized myself more with the financial side, because it's so vastly different even in the process, right? So we went in this, narrowed it down, got it to 5, had one strategic in the final 5. They were really not a player. It didn't look like it was going to, they just were not as serious. We had, a couple financial buyers that were very, very aggressive. I ended up going with one of them. That's when I got the next 2x4 to the head. It's like, holy cow. I didn't understand how that, I had heard, right? But I had very limited understanding of how the whole PE model works, and it's fine, right? And it works, and but had I been a little more educated on that, I probably would have handled some of the in-depth questioning, interrogation. It's very, very, very in depth, and I had no idea. So it's hard not as a passionate, prideful entrepreneur. This is your baby. You've spent your whole life building it, and now I have people coming in, and their whole intent is to get the price down. Right. So they're going to try to find problems. They're going to point out this and that, and you take offense to it. And it was really hard for me. And as I look back on it, I think that they were being entirely fair at times. Maybe a couple of times they weren't. But, if I had been better prepared, I think I could have handled that a little better. And I know friends of mine that are about to go into this, and I'm just going out of my way to say, dude, beware. You need to be ready, and just know that they're not calling you a liar. It's not a personal attack. This is how it works. That's how
it's their spreadsheet junkies. You know what I mean? And there is a proliferation right now of operator PE firms and family offices now coming around. But the PE firm that bought my partner's company, the multi-billion-dollar firm. And when I always ask someone in our boot camps, I'm like, how many people work for that PE firm? They have ranges all over the place. There's only 12. There's 12 people, and they have these spreadsheets of your EBITDA and cash flow just going straight up at a 45-degree angle. So and their goal is to then in due diligence is to understand where the risk is, and it's so arbitrary. I mean, it's all based on each PE. If you've seen one PE firm, you've seen one PE firm. That's it. Explain that process, Chris, as you're going down this route. I mean, did you have an exclusive period with this buyer, and then what that due diligence and those, when you say you learned a lot, what were some of the big takeaways? And again, regardless of getting in maybe the specifics of, the personal dynamics with you and the buyers, I think this is just generally how this process works that I've been aware of. So explain where was the other, call maybe one by ones that were getting hit across the face instead of 2x4s along the way? What was that experience like?
Well, I think again, for me, if I had known what to expect, right, and this is my fault, right, I think my investment bankers did everything in their power to warn me, but I maybe didn't listen, or I'm stubborn. But I guess when they're digging in at the depth and the level that they were, when they come in and completely consume your senior team and your finance department, just completely take them offline. And I wasn't prepared for that. And I wasn't prepared for this thing dragging out as long as it did. Once we do it, it was 3 times longer than they had, suggested it might be. And part of it is that I understand now they're doing everything they can to mitigate risk, right? It's a very, very thin margin, and the whole relationship that they have with their debt partners and equity partners. I didn't understand these PE firms. Most of them, a lot of them, they don't hardly put any money in, right? They have debt and equity. It's a ratio, very, very thin. When we first had the first few meetings and they had conference calls, and there was always 2, 3, 4 bankers on the speakerphone listening all day. And I thought, what in the world's going on? Well, they literally have got these partners with them, and the deal hinges on that. And if one of their lenders steps out and says, I don't like this, it creates massive problems. And I guess I didn't understand that. And I said things and did things, that drove these guys nuts. Again, I'm this goofy entrepreneur.
Awesome. Yeah.
I know how to run a business, and you come in I interpreted it. Maybe I was thin skinned, maybe not. But as they were attacking us, and it's you got to be kidding me. Here it is. Look at it. But they look at data in a way I've never seen before. You talk about data geeks, you talk about spreadsheet fanatics. It's actually amazing what they do. And there's some really smart people. So again, no offense, but I wasn't ready for it. I didn't prepare myself. So I would just say to anyone that is considering selling, if you can sell to a strategic, I think you're always better off if you're, depending on the business. But for us, I just had this fairy tale image of selling to a strategic that, I knew, and I could see how our business would fit in, and everyone would, be happy ever after. It didn't end that way. And I was not ready to deal with the data geeks. It just threw me for a loop.
I interviewed this guy recently, Chris, and he literally said, he goes, oh yeah, I told the analyst get out of my effing office before I punch you in the face. He literally said
Yeah.
that to the guy because he was like,
Yeah.
so.
Well, and
uh,
it got ugly. And I just looking back on it, I understand that I contributed to that, right? I mean, I did. I'm a passionate defender of my family and the legacy that we created, and I felt like they were doing everything in their power to chisel this price down. And I think on their part, they thought they were going to come into this family-owned business and find low-hanging fruit. They thought for sure, here's our offer, but for sure we're going to ding them on this, this, and this. And they came in and they couldn't find it. So they were under big pressure. We had a pretty well-run machine, and we were a little tighter than they thought operationally, and the systems were a little stronger than they thought. So there was tension back and forth. And there was a point where, I was ready to walk. I was ready to bail. But as I look back on it now, I think we got a fair price. I wouldn't wish that process on my worst enemy. So I'm somewhat inspired and passionate to make sure I share that with other business owners. If you're going to go through it, do yourself a favor and familiarize yourself with the ABCs of PE. Because if you don't, they're going to come in and you're going to immediately demonize them. And I did, and I regret some of that. So it was just a tough experience. As it all turned out, everything's good, but boy, it was a
What were some of the things that they were
road.
trying? What was some of the things that they were like? Because you had been focusing on the value drivers over the years that you were able to dig in your heels and not? Because I mean, like their goal is to get their internal rate of return for their investors, right? Which is why they slap
Right,
a bunch of debt on it and very little equity,
right.
and then try and push the price down. So, like, what were some of the things that you were able to hold strong on because you'd worked on it for years?
So the number one thing that they didn't understand, it was all rooted in our core values. So our core values obviously were the key fundamentals that guided the company from day one to the end, and our culture was built around that. So there were numerous instances where they would ask us about, okay, so these next platforms that are coming up with these customers, what makes you think you're going to get that business? And the long and short of it was partially that we were the only supplier in the world that does it, right? But what makes you think? And I remember saying to them, and my guys would say, because that's the way we understand it. That's the relationship we have, and it's rooted in trust. They can't quantify that. They can't trust. Things like trust and integrity mean nothing to these guys, and I understand why, because it's not on the spreadsheet. And we had, it was a difficult conversation. And I think after a while they dove in, and when we let them go out and talk to our customers, then I think it sunk in. But that was a hard one. I mean, it was really hard to get through that, because it's hard not to think that they're attacking you, and, they're just doing their job, really. I think that was one thing. And the other thing is we're, family owned business of our size. We didn't leave any money in the business. And they said it was the first deal of this size they've ever seen like that, or one of the only ones. And so that then added to some paranoia on their side in terms of the non-compete. So we spent a month on the non-compete. And again, I would say, hey, I have no desire to compete with you. That's not me. I'm a man of integrity. They'd look at me like I was a Martian. They didn't understand what that meant. If it wasn't in writing, if they couldn't quantify it, if they didn't have data to support it, and I'm looking, finally, we
Give me a
couldn't
handshake,
even.
right?
Well, it's like, yeah, I'm a handshake guy. Ask anybody. Ask my customers. That's how we built this business. They're like, that doesn't mean squat to me. What else you got?
Which is, so I want to because the deal structure, is usually one of the questions I get into, which is you didn't leave any money in there. When you say that, just for clarification for the listeners, I mean, you didn't roll any equity, right? So it wasn't just cash
No,
on the books when you sold, but it was like you walked away from the business
walked away.
which
Yep.
is so unique. Other than a family office buying someone, they usually buy out everything, but like a private equity from allowing the owner to walk away with nothing rolled in is very unique. So what was the overall deal structure? Was it cash? Was there any promissory notes? And then, what did they do to the business afterwards? Like, how much debt did they put on the books to purchase it? Because I think you and I were talking about a story before we got online of which is probably has to do with what your ability or not ability, or your desire or not a desire to roll some equity in there, that the company still has to thrive and pay off that debt, which is crazy.
Yeah.
So
Yeah. No, and
Go ahead.
Well, yeah, and I think what's pretty important here that people understand the primary reason. I mean, there's two primary reasons that they like people to leave money in. They want you to be a partner, right? They want you to be vested and have a piece, skin in the game, which I get. But it's hard to sell that to a lifelong entrepreneur who now has no control. So to your point, they're going to do things with this business I would never dream of doing. Lever it to a level that's unimaginable for me. I mean, take all the cash out of the business and run this thing on a thin margin and make cuts that I would never dream of doing. For me, I couldn't do it. I couldn't be a part of that because it didn't align with who I am. So, but that's the reason. They also, these PE firms have very little cash to put in these deals. They're dependent upon relationships with debt partners and equity partners. And, they all operate very similar ratios, and I would say these guys were, very typical, not levered any more than anyone else, but it's tight.
But the industry is a lot, right? I mean, and I don't know with your PE firm, so what I find just crazy, and like this is a whole podcast for a different day, or maybe just me talking in my basement by myself, is like the PE industry is so little, has so little regulation, Chris, right. They go get this debt from these big, huge credit tranches from endowments and pension funds and all this stuff. And there's very little oversight. So they can put up to 7 times EBITDA in debt on these, where a normal commercial bank wouldn't put more than 2. So you're just it's insane. Yeah. No one's responsible if the thing goes belly up. It's just,
Yeah, it's crazy. And I'm an anti-regulation guy. I mean, I'm a capitalist, but when I start digging into this and looking at it and doing a little research, that was one of my first comments. I'm amazed that there isn't more regulation. I mean, it's crazy because you're talking about huge dollars in play here. What's going on right now with PE? So it's very interesting.
It's crazy. And like I said, that multi-billion-dollar fund that bought my partner's company has 12 people. So it's not like there's a bunch of people that are it's not I don't know, man. It makes no logical sense to me, honestly.
Yeah. But again, as I keep thinking about this and I think about the experience, and it was a rough one for me, I just feel compelled to share with friends and colleagues and other business owners. If you're thinking about selling and you go through this, make sure you fully understand it. Make sure that you don't get caught off guard like I did, because it really was a surprise for me. And I don't like surprises. I just don't do well with it. And I couldn't believe what they were saying and what they were doing. And at the moment, I felt like, hey, these guys they're coming after me. They're calling me a liar. They're questioning my company, my baby that I spent my life building. It's just a lot of emotion attached to that. And I could have, I think I could have handled it a little better than I did. I certainly have some, looking back on it, just realized that there were some moments that were not my best, I will just say,
It's emotional,
because it was a lot of sleepless nights, and you're thinking about your family and the legacy component and big numbers, right? I mean, major numbers. So just make sure you're familiar with how they work and the levers that they're going to pull before you go into it. And I think it will help people.
So that's where we talk about our 5 principles, understanding your first one, which is your drivers. What's important to you? How do you then, the second principle of understanding your financial targets and how to weigh all these decisions against each other is the knowledge piece. So then I know we're getting short on time here, Chris. Is it you had mentioned that, a lot of entrepreneurs think they're just going to golf, but you did not. You had some reality that you approached this in. And so maybe explain what you did along the year that it took to take this to market and to sell it, what you were doing in parallel that allowed you to kick off after the sale with a bunch of passion.
Yeah, no, and I'm thankful for this piece because I feel like I was well prepared. I was fortunate enough to have some friends that sold businesses, and I was able to, talk with some other folks that I met and learn from it, right? And there was a lot of conversation about what's next. And I had a couple friends that put all their energy into selling the business, never gave any thought to what's next. So here you have someone that's been an entrepreneur their whole life, this driven type A, and whether we want to admit it or not, some of our perceived self-worth is attached to the entities in which we have created. It's wrong, I get it, but it is what it is, right? So they get a big check, they close, and the next day they're sitting at the breakfast counter staring at their wife wondering, what in the hell do I do now? And it happens all the time. And that scared me because my biggest fear is that I don't have a place to go to, a team to work with, and deals. I love deals, right? So I started preparing. We start framing up what, Carlson 2.0 looks like, and I'm very thankful that we did that, because literally the day after we closed, I walked into our next office. So we have our family office all set up. We have a couple other businesses that we own in the racing industry that are basically nonprofits because you don't make money in racing. So I have some intense focus on trying to get those in the black. But we set up a family foundation, Carlson Family Foundation, doing some great things with that. That was all set up, 501c3 status in place. I already had my team kind of built out. We were fortunate enough to take a few key people with us that were working on some of these other, we call them non-essential Sportech employees that were working in our other family businesses. And our intention is that, that we are gonna do some business acquisitions. We've got a model in place. We're looking at deal flow right now. And there was never a moment when I stared across the table wondering, well, what do I do now? I love to hunt and fish. I love the racing industry, but I know I can't fish every day. I need to be in business. I am a business junkie. I get energy from it. So I'm thankful that I had enough people. And I had again, back to the 2x4, I had a couple of my friends say, hey, dude, you can't hunt and fish full time. You're going to need to do something. And I'm thankful that they got me thinking that way and that we set this up, because it's really been a smooth transition. We're having a lot of fun, and I'm doing what I love as an entrepreneur. We're going to be, working with small businesses, with family-owned businesses who have reached constraints. They have been unable to grow their business because maybe they reached that 2012 moment that we did, and that they had trouble with that pivot. And I'd love to be able to sit across, share our story, share our values, our operational philosophy, and then partner with them at some level. And I just think it's a refreshing change to what's going on with especially some of the financial buyers out there. So
totally agree. And Chris, is there anything like, if you look back at your journey, knowing what you know now, like, there's a couple people that have probably very similar numbers to you that have been on the show that they're like, you know what? One woman is like, I wish I wouldn't have sold. She sold a PE firm and then they destroyed her baby. And I'm not saying that they did it because it's been fairly fresh. So the story has yet to unfold, but like the stories are very common, right? So like, but she said, I wish I would have been the one acquiring. And so like there's different structures like ESOPs, or you could have leveraged your own company. There's different things that you could have done. Like, is there any regret, or like just because obviously it sounds like you're passionate now, but like maybe like there's a better way to put it, because like I would have done a lot of things differently, Chris. However, I wouldn't be where I am today, and I love where I am today. So it's almost like in a different situation, these are tactical strategies that would have done differently, but I don't regret where I'm at. Does that make sense?
It totally does. And no, I'm very thankful for this too. I literally don't have any regrets. I mean, and it's relatively fresh, right? So, it's only been a few months, but there's not a day that I say, man, I wish I was still there. I miss some of my people. Obviously, we had a fantastic team. My leadership team, some of the most impressive guys I've ever met in my life. I will tell you that, it's a little different starting with a team of 3 or 4 as we start cranking here. I'm not saying we have a talent deficit, because I have some great folks, but I'm used to working with a very complete, thorough, robust team. It's a little different, but it's very entrepreneurial and very edgy. And so I'm liking it. But, the only thing that I maybe regret again is just, I wish I would have educated myself in a couple areas. One being, I should have had a full understanding of how PE and financial buyers work. That would have saved me some grief. And I can assure you it would have saved some grief with our buyer, because I know I was a little unpleasant at times. But the other thing is really understanding enterprise value. I think that virtually every business owner I know thinks their business is worth more than it is. And I was in that group. I think that my investment bankers gave me a range in the very early stages. Turns out they were right on. I mean, right on. And I didn't believe them. I thought that we'd sell to a strategic. That strategic would pay up. I just think it's the nature of entrepreneurs. I wish that I had been a little better prepared for that, because I think that would have eased the entire process. Because
Mm-hmm.
we ended up right where they said we were gonna. And it helped me at the end as I reflected back on my notes. But as I'm talking to business owners now, including some that we're talking to folks about buying their business, I see this very, very consistently. Everybody thinks their business is worth more. And you know what it is? Literally, you talk to someone, they say, well, my buddy sold his business and he got a 10 multiple. I should get the same. They're in completely different industries. The business is completely different, but they get hung up on a multiple. And what I've been saying to a lot of people is, multiple of what? Right? I mean, because that's what everybody asks me. Oh, what'd you get? You get a 7 and 8? I said, what difference does it make? What are you multiplying? Because a multiple of 0 is 0. And I know people that have businesses that have virtually zero profitability and think their business is worth a bunch of dough. And I hate to be the one to tell them it's not. So again,
Chris,
it's educate yourself. Better understand it.
I mean, like I love it because like in our boot camp, we literally go over enterprise, and then like I would even say take it 2 steps further, because everybody talks about the enterprise value and the multiple whatever on the golf course, but then I like to say, well, what's your equity value? I mean, by the way, your equity value is after your debt. Oh, and you had 4 partners. Oh, and by the way, one more step further is after equity, then it's called net proceeds. And that's after tax man takes whatever. So it's just people are measuring and monitoring the wrong numbers, completely wrong numbers.
Well, and make sure you have a very strong understanding of capital gains, because Uncle Chris is going to be writing a check here in April, and I still am not over that. I mean, and again, it's back to the same thing. Educate yourself. Understand what your business is really worth, and then understand what does it cost, the transaction costs. If you have partnerships, by the way, you have to pay off your debt. Net proceeds. Yep. Absolutely. Because I think we get, and again, I'm picking on myself. I'm one of these quirky entrepreneurs, and I embrace it, but you have to look at the whole picture. You have to understand. I think people sit and they say, "Oh, my business is worth $100 million." Okay, what's the real value? Then it's probably worth 80. And then what's the net proceeds? You start working that backwards. I think a lot of people think that they're going to have that 100 million or whatever it is to reinvest and to do whatever they plan to do. Guess what? It doesn't work that way. Just doesn't. So.
Oh man, I love it, because I'm laughing because I'm the quirky entrepreneur, which is why I built our 5 principles in the bootcamp, because it's this is what it's like. I should call it the 2x4 course.
Yeah. Well, or, every one of you in this room, go through an exercise after you explain enterprise value. I want you to do a quick calculation. Take your EBITDA, apply a multiple that you think is fair, and then have a conversation, and then tell everyone in there. Now, I want you to go in and take 20% off that. Now you might be closer,
Well, and pay down your debt, then pay your taxes, then pay, all that.
Yeah.
All right, Chris, I gotta be conscious of your time. So this has been a blast. If you were to, leave, you just gave a bunch of takeaways, but if you were to leave, the listeners with, hey, which 2x4, maybe you got a couple one-liners that you would like to leave everybody with, what would it be?
I just think for me, it was, if you once you commit, once you make that decision, your first job is to educate yourself. Don't go into this assuming you understand. Don't go into it based on hearsay and what you think might happen. Ask a lot of great questions, especially in the early stages when you're aligning your resources. Make sure your question to answer ratio is right. Because again, we seem to think we know it all. We've been successful in business. This is a whole new world. So, and then, the other thing is just, as I think there's a lot of people that say, hey, I know it's going to be 3 to 5 years away. Really have laser focus on those key value drivers. And that's what you're doing with your boot camp and educating people. And I just encourage people to gather as much information and increase their understanding, because it will save some grief on the other end and the inevitable 2x4 to the head, for sure.
I love it. What's the best way to get in touch with you if people want to reach out?
So my email is probably best, and that's ccarlson@envisioncompany.com.
Chris, thanks so much for coming on the show.
Thank you. I've enjoyed the time.